saw a significant jump coming through for revenue. As I mentioned, headline earnings per share up 27%. And we're actually starting to see strong demand across the board in the resource sector. Even in construction and agriculture, we're starting to see quite a significant turnaround. Take us over the period that was, because we even saw double-digit growth for your company in the previous reporting period.
Yes, thanks. Thanks for having me. The biggest contributor to our growth in this period was from the agricultural sector, although all the other sectors performed well. Agricultural machinery sales are up somewhat over last year. I saw in this morning's newspaper that tractor sales are up year-to-date 60% and combine harvester sales up about 45%, if I remember correctly. So that gives you an indication of that market, and that was probably the biggest contributor to our, certainly at our operating profit level. But generally, demand for resource products from abroad is strong, which means that our industrial consumables business, BMG, enjoyed a good 6-month period, good demand for its product. And then likewise, as you mentioned, the construction equipment sector has started showing some signs of revival. So on the whole, we're very pleased with where we're at.
Oh, well, let's touch on Capital Equipment Group, and you alluded to it with regards to the surge that we've seen in agricultural equipment sales and tractor sales growing quite strongly. We're seeing double-digit growth within this space for your company. Is this as good as it's going to get? Because we know that agriculture is very cyclical, and I'm sure you've experienced this kind of growth before and then subsequently being disappointed. What kind of assumptions have you put in place going forward?
Well, I hope that we do enjoy it for a long time. I think what's got to be realistic, the agricultural sector in South Africa is very much subject to two major influences. The international price of the soft commodities, so in our case it would be grain prices, wheat and maize prices, and then the weather. You know, you can have booming wheat and maize prices, but if the sun burns your crop and there's no water, you have a problem. So to answer your question, what does the future look like? Beyond 6 months, difficult to estimate. We obviously watch climatology forecasts and try and get an anticipated early warning of whether there's a weather problem. But generally speaking, conditions are good in the agricultural sector at the moment. The sector is generally awash with cash. Farmers have enjoyed good grain prices, that's maize and wheat prices. Yields have been good, rains have been good. So generally speaking, we're in a good space at the moment. We, of course, are realistic enough to anticipate that the next drought or downswing could be just around the corner. So we tend to watch our overheads very carefully and make sure that should that drought suddenly appear on the horizon, that we're ready for it. It just means we make less profits. But the nice thing is when we make profits in good conditions, we jokingly say when it rains money for us. So that's generally our view. Okay,
well, under the CEG division, with regards to construction, we saw the machinery sector for your company starting to recover after we saw a decline of around 50% over the past couple of years. We're starting to see things looking slightly better. Give us an indication of who you compete with within the space. Is it the likes of Protec and Barlow World, and how are you faring with regards to the competition in the construction industry? I'm sure it must be quite tough.
The construction industry, as all industries are, it is tough. We compete head-on with all the majors, so let's put into that category Volvo, Caterpillar, Komatsu, Hitachi. Our brand names are Doosan, which was the old Daewoo, which is a South Korean product, and then Case, which is Case Construction. Market is competitive. We have certainly increased our market share. It also depends on which sector you are active in. We are generally active in the light machinery sector, so that's what we call backhoe loaders or tractor loader backhoes, a digger loader, that's what the average person knows it as. And then wheel loaders or front end loaders and smaller excavators up to about 80 tons. So yes, market has turned, but we've also enjoyed an uptick in market share.
With regards to Bearing Man Group, we've actually seen quite a nice recovery there. Revenue up around 12%. Also, inventories increasing to 800 million rand from 100 million rand rather. The mineral resources space, as we've alluded to, looking quite strong. Manufacturing is a bit of a pressure point for you. Margins slightly low, pressurized. Give us an indication of how the split is between the mineral resource sector relative to the manufacturing sector, where you are starting to see a bit of pressure filtering through.
Okay, maybe just for clarification, our BMG business sells predominantly into the aftermarket, so there's very little OE or original equipment. About 95% of our sales are therefore for repairs and maintenance. However, the direct sales into mining and the mineral sector, probably about 25%, but we estimate that another 25% finds its way into the mineral sector or resources sector via manufacturers, for example, fan or pump manufacturers that would install our product. So roughly 50% of our product finds its way into the resources sector. Resources sector is strong at the moment. You know, there's a huge demand from China. You know, China consumes the bulk of the world's minerals at the moment. So it depends on one's view of the market, whether you anticipate that kind of global resource demand to continue. If you do, you know, we will follow the trend. If your view is that China is going to have a hard landing, it will affect our business.
Arnold,
but right now, things are going well.
Yeah, well, right now I'd also like to touch on the cash position from 168 million rand to 99 million rand. Obviously, working capital is what you needed over the period. Are you planning to increase that going forward? Does it worry you that you're sitting on such a low cash position, but then again, you don't really have much debt either?
Generally speaking, our group is hugely cash generative. We're sitting on about 330 million of cash at the moment. We did consume cash in this period compared to the same period last year. But it was an active decision of ours. We viewed the strong rand as a buying opportunity. We also saw lead times increasing from our suppliers abroad about 18 months ago and took the view that we wanted to stock up in anticipation of lead times going up even more. And it served us well. Going forward, you know, we have very strict parameters in managing our working capital. That's our lifeblood. If we manage our working capital well, we generate cash. We do take active decisions from time to time to increase stock, as I've said, or to decrease it. 18 months ago, 2 years ago, with the global financial crisis, we cold-bloodedly took the decision that we wanted to reduce our inventory, given what was happening in the world, and generate more cash. And we generated of the order of about 600 million rand in cash in that particular year. So it depends on the trading cycle. We see things as fairly positive at the moment. So we may invest a little bit more into working capital for the next 6 months.